How does FDIC insurance work with joint accounts? Have you ever wondered how your money is protected when you share an account with someone else? Understanding how Federal Deposit Insurance Corporation insurance works with joint accounts can help you make informed choices about your finances. Let's break it down. Federal Deposit Insurance Corporation insurance protects depositors by covering deposits up to $250,000 per depositor, per insured bank, for each account ownership category. When it comes to joint accounts, the coverage is calculated differently than for single ownership accounts. In a joint account, each co-owner is insured up to $250,000. So, if you and a partner have a joint account, the total insurance coverage can reach $500,000, assuming all requirements are met. This means that each person's share in the account is protected separately. The Federal Deposit Insurance Corporation assumes that each co-owner has an equal interest in the joint account unless you specify otherwise. If one person contributes more than the other, the insurance coverage will reflect those actual ownership interests. It is also important to note that joint accounts are insured separately from single ownership accounts, retirement accounts, and other ownership categories. This means if you have individual accounts with $250,000 in one bank, you can still have an additional $250,000 insured for each joint account you co-own. Adding more owners to a joint account can increase the total coverage. For example, if 3 people own a joint account, the insurance coverage could be as high as $750,000. However, keep in mind that having different account types does not increase coverage within the same ownership category. Whether your deposits are in checking, savings, or certificates of deposit, the total coverage for that ownership category remains limited to $250,000 per owner. Banks and credit unions often advise customers to structure their accounts across different ownership categories. This strategy helps maximize Federal Deposit Insurance Corporation insurance coverage. Federally insured credit unions provide similar coverage through the National Credit Union Share Insurance Fund. Joint accounts at credit unions are also insured up to $250,000 per co-owner, separate from individual and retirement accounts. Understanding these rules is essential for managing your deposits securely. Simply dividing funds among multiple accounts of the same ownership type at the same institution does not increase your insurance coverage. Instead, you can maximize your coverage by utilizing different ownership categories, including joint accounts with multiple owners. In summary, Federal Deposit Insurance Corporation insurance for joint accounts provides $250,000 coverage per co-owner. This structure allows joint accounts to offer higher total insurance limits compared to single ownership accounts at the same bank or credit union. So, when planning your finances, consider how joint accounts can help protect your money effectively.